All righty, good evening and welcome. It is Tuesday, November 7th, 2023, and it is election day. So hopefully you have exercised your right to vote out there today. And let's see how the market voted, and the market voted up today. So let's take a look at SPY and see what it looked like. We opened the day today on SPX with a expected move of 20 this morning, and we ended up the day up 12 points on SPX, so at the $1.24 on SPY. There were some ups and downs during the session, mostly ups, a couple dips, and then finishing towards the highs of the day. This week, we do have a bullish PSAR reversal, so that is a very bullish sign on SPY. MACD continues to climb, as do RSI on the weekly, so very positive weekly look. And if we're looking at the daily, again, MACD has just been climbing for almost 2 straight weeks, hanging in there with now, I believe, 7 straight up sessions on SPY. So it's getting a little bit overdone. But when we look at RSI and MACD and some of the things going on here, it's not in an overbought state. So 7 straight up days, still not enough to really trigger us into an overbought anything, except the fact that, maybe we're approaching the 2 ATR here, which is this red bar at the top. We're still trying to fill this gap here. We tried, for 6 days back here in October. Couldn't get it done. And now we've been 3 days into this gap again and just can't seem to fill this gap and get higher. We'll see if tomorrow's the day. If not, does this gap just hold some magic that we just can't break through the gap right now on SPY? So that's where we're looking on SPY, up 0.28%. We take a look at the Qs today. Pretty much the same type of scenario. Qs have been up 8 straight days. So 8 straight up days, still not into an overbought state here, but getting up to the 2 ATR. Again, due for a pullback, yes, very extended, except the fact that we're just not in any overbought territory. But 8 straight days is a long time to be up for any particular stock or index in a row. IWM giving back a little bit today, gave back a lot yesterday, giving back a little bit today. Still looks halfway decent, bouncing off of this support at the bottom of its channel, breaking through this downtrend channel, but now maybe coming back down to retest that. Yeah, we've got gaps all over the place to the downside. We've got gaps on the upside. This holds true pretty much everywhere. There's a ton of gaps that we left behind last week on the run up. So we do have a lot to fill to the downside, but we do have some to fill to the upside. So IWM continues to just move sideways, and we'll just keep an eye on where things are overall. I'm not going to tell you one way or the other that, hey, we're going up or we're going down, because really when it comes down to it, it's all about momentum right now, and the momentum is up. So a lot of levels don't really matter, but you got to think that if you've been up for 7 or 8 straight days, at some point, this thing's got to take a little bit of a break, but I don't know when that break is coming. If we look at the number of stocks, though, over their 50 moving average, 50-day moving average, it dropped a little bit more today. So easing off a bit, even though it made a huge meteoric rise from about 10% all the way up to about 50%, now dropping back into the 40s. So settling back a bit, but it's certainly right in the middle of the range that we would keep an eye on. So we always keep an eye on this range to the upside and the downside here. So if it gets to the extreme lows, and we'll extend this out a little bit more, dating back till 2008 or so on that. So right in the middle. So right now, nothing to do in here. We could move up or down. Looking at the put call ratio, again, pulling downwards on the session. And we'll take a look. If we look at the 21-day moving average, continues to dip. If we turn that so that 21-day moving average, if we just briefly turn it into a 10-day exponential moving average. It is heading lower. As this put-call ratio on the 10 moving average exponential here is moving lower, which we turned it into here, that's a pretty bullish sign. So if we're going to see some weakness here and moving to the downside, really don't track RSI on this because it's really just oscillating up and down. But I think the moving average is, if we start to get these things really starting to head lower, back down towards this 70 level, 0.7 level, I think that'll be interesting to watch. But overall, getting this to come down the way it is a pretty bullish sign. So if it continues to fall, continues to drop, I think the markets continue to go higher. VIX dropped slightly on the session, 1481. The US dollar popped up a little bit on the session, hitting the 2 ATR the last two sessions, bouncing back up to the 50 exponential moving average. Weekly, still very bearish. Daily, trying to put in a little bit of a bottom and base out a little bit here. However, this thing's just really in a pretty dominating sideways trend. So if we really look at this thing, just a complete sideways trend and sideways movement on this. So just keep this running, see if it can break lower, but the US dollar just not willing to give in. If we look at TNX, down a bit on the session today. Weekly, MACD and RSI continue to fall. Daily, MACD and RSI continue to fall. So you've got interest rates tipping over a bit, but right down to this uptrend line again on this session today. So we'll just extend that out a little bit more. But these interest rates certainly are interesting to keep an eye on. You've got a big gap above, so I think we got to watch that particular gap to get filled. But I really don't see a reason for rates to fall much further here. It doesn't mean they can't. However, I think if you're looking at, what's leading this, is it rates dropping or buying of bonds rising? Which one leads the way? TLT moving up on the session after 2 days, a big drop yesterday, fractionally up today, back to the downtrend, short-term downtrend line that we're in, but still a bit of a bullish run. How long can this run go? If we take a look here and we look at the squeeze, this thing had a pretty elongated squeeze to the downside, and now you can see that squeeze turning over. Typically, a squeeze is going to last about 8 bars or so. So in this case, about 8 weeks. It's past that. So we do expect some relief here when we're looking at that on the weekly. But now let's look at it on the daily. So on the daily, you're just entering a squeeze to the upside. So you got MACD rising. You got RSI rising, breaking above the 50 on TLT, and now generating a squeeze pop to the upside. So I think you got some legs to go here. I think rates can continue to drop, or at least move sideways a bit, but I think they're going to have to drop. There's not a big reason for them to drop a whole lot more, but it looks good for TLT here. I'd continue to, be constructive on this. I wouldn't go all in and I wouldn't buy everything, but I would start scaling in as I've been talking, and we've been selling naked puts on this. I think every time we get a drop in either ZB or in the, TLT, TMF, what have you, I think you can nibble a little bit in these areas. All right, taking a look at the futures today. Let's get back to our grid here. Taking a look at the futures on the session. Decent down day here on 6A. So you've got the US dollar moving up 0.3%, and then you've got the Aussie dollar dropping, the British pound dropping, the Canadian dollar dropping, and the euro dropping. Not quite as much as the other ones. Euro still looks, I think, pretty constructive here. I think the weekly looks decent. I think this bounce off of this particular trend line here is something positive to keep an eye on. You broke this downtrend. We can probably get rid of this line now on the downtrend, and you're really starting a new uptrend here. I don't know the perfect place to really draw this, but we'll get as many touches as we can. I think this is the way it looks. And now you have a bit of a channel as well. So a little bit of a expanding upward channel as we move up. And I think this looks positive. So I think these pullbacks are giving us a little bit of an opportunity on 6E. We'll look to probably be putting something on shortly. All right, bonds, we talked about this with TLT, but continues to move upwards. Strong MACD and RSI, but RSI starting to level out a bit. The weekly looks good, and I think you've got to look what happens when you start to get to support here, which is now a resistance level. Now the question is, does this become solid resistance? Which of these downtrend lines are we going to break? Do we bounce back off of them? We've got other downtrends way up here. We got the 200 way up here. And something to take a look at here is the 2 ATR is just ahead of where we are on bonds. So I think you've got to keep an eye on that. And if we're looking at the 10-year Treasury index here on the TNX, you're down to the 2 ATR here, not the 3, but you're at the 2 ATR bouncing around that. So a little bit overextended, heading towards overextended levels. We'll keep an eye on bonds. Oil getting just absolutely crushed in here. So oil having a huge down day. Overall, I think the session today about over 3% drop in oil. Now, what do you got when you're looking here? We potentially have a head and shoulders pattern. So I think you've got the left here, you've got the left shoulder, you've got the head in here, and then you've got the right shoulder forming, and we're right down really to this neckline that happens to be a previous pivot level, and a previous support level is really the neckline on this. If this really doesn't hold well here, oil could be in for a little bit more pain and a little bit more hurt. The weekly still very, very bearish. MACD and RSI have been heading lower. Bullish or bearish PSAR signal on the weekly. And then on the daily, besides this head and shoulders pattern, you're starting to get close to oversold levels here. We have not seen that in a long, long time. In fact, we could probably pop it up here, go back. I think this is a 1 year. So back here on a year, you got to go all the way back here till this previous low around, I don't know, 67-ish and change back in May. And then back here about the 66-ish level back in March. Those are the last 2 times we saw oversold. And now we're starting to get there on the daily. So as the daily goes, you're starting to get into, I think, that oversold level here. So you really got to keep an eye on it. But I think we're getting to a point where, it's got to make a little bit of a stand here, or, could be significantly more downside to go. So we'll keep an eye on it and see where we go on oil. But overall, I think it's still been bearish, still in a downtrend, but we'll look to see if we can start to find some basing in here. I had said 78-ish level. We are right at it, 77, 78 right in here. We might end up down a little bit further. So the way it looks right now, we could pop down to 75 to get to the 3 ATR is where we are now. If we get down there and we get any kind of oversold and maybe a bit of a bounce starting to go here and build a base, we're going to continue to sell naked puts on oil. We still like oil overall. All right, so gold is also been pulling back recently, had another drop today. It's still constructive and it's still right in the middle of its range. I think it's a perfect place to be. It's coming off of overbought territory, heading lower, all constructive, a good pullback here to the 21 moving average. We'll see, and we bounced off of that today. We're right at the 200 for this particular contract. So we'll keep an eye on gold, but overall, I think it looks good in here. Dead center of its range. I think it's a perfect spot to be looking to put on some strangles. So I think gold's setting itself up well for strangles. I think copper here also looking decent for strangles. Why? Well, I think you're getting some weekly bounce here, MACD and RSI moving higher, and then the daily you've got some weakness. I like it when they're, you know, if I'm playing directional, I want them to be going the same way. If I want to play a strangle, I like it when they're kind of fighting each other a bit. And you're right in the middle of the ATR bands and the Bollinger bands here. So I think this is a good spot to also look at doing some stuff in HG, which is copper. Looking at today's sectors, overall, strongest sector by far, biotech had a good rebound day after getting creamed yesterday. Semiconductors up 2% today. XLY, which is your Amazon and your Tesla, your consumer discretionary, moving higher. Tech stocks moving up 1%, continuing to be strong. Now, looking at tech stocks here, we've broken the downtrend here to the upside, and now you've got a higher high. Okay, so you've now got a higher high. The question is, do we get a higher low, and are we off to the races to the upside? You're getting above the 2 ATR, close to the 3 ATR. Again, I think everything's a little bit overdone. Would not be surprised to see a little bit of a pullback or slowdown coming tomorrow. Communications still are in this trend range, moving sideways. And I think you just let these things move sideways. Here, this is your Meta and your Google. Let's let these things just continue to improve here. But you're getting to the top of this sideways channel. It's probably been a fantastic strangle trade in communications here overall. And if we look at the bottom sectors, would be oil, down almost 3%, XLE, your energy stocks down by over 2%, and then your materials here down by almost 2%, and then regional banks down 1% here after a pretty strong run up, all productive. And then taking a look at some of the big name tech stocks, Apple getting up to the 2 ATR here, which is in sideways, not an uptrend. It could start this trend. Who knows? I think you got to also look potentially for Apple to want to take a little bit of a chill out here. Maybe another up day or so, but man, look at just green bars one after another rising through this downtrend. I think you've got to expect some sort of a pullback in here. Bulls got to run out of ammo a little bit and are going to need to reload. Microsoft, though, it is absolutely off to the races. Spectacular rise on Microsoft. This thing is on fire, and no matter how you draw this stuff, Microsoft is probably one of the strongest looking stocks out there, and this is absolutely moving tech. But you are oversold weekly, oversold daily. If we take a quick look at the charts here, you're in a squeeze now, so you're 2 bars into a squeeze. I think you've got to, and you're above the 3 ATR, you got to think that at some point a break is coming. Now, it doesn't mean we're coming all the way back down. All we need is a break or a little pullback, maybe to the 21 EMA on some of these stocks. Amazon rocketing higher, out of control, almost to overbought territory. Meta moving higher nicely, not anywhere near oversold. So Meta, a nice calm rise. Google, a nice bounce off of that, now trying to fill the gap halfway through the gap from earnings. Constructive. We'll see if Google can continue its move. NVIDIA continuing to move higher, up a bit today. Tesla up another % today. Has a gap to fill here. So we'll be watching this gap to see if we can get this filled. Coming off of this oversold territory here. Let's take that line off. We've got to break the downtrend. We have not nowhere near establishing any kind of a higher high yet on Tesla, but strong moves up, but we're also creating some gaps as we go. All right, so there's where we are on most of the stocks. Let's take a look at where we are in our account today. And it's kind of an interesting up and down day. Not a great day overall, but not bad. We ended up today with 421 on our delta, 0.13, totally within the 0.2 range that we look up and down. So we are delta neutral as we can be. Theta bumped up a little bit today to 1251. So good theta, pretty close to our 0.4 minimum that we shoot for. We did lose some net lick today, so it dropped about $6,000 today. So we dropped a little bit off our net lick, but still we are almost near our all-time highs. BP bumped up a bit today to 76. Main reason for that is I'm back into Bill. So I put another $100,000 of this account back into Bill, which is going to use about $25,000 worth of buying power when it's in maintenance mode. The initial on that is 50%. So when you're buying Bill here, you're going to spend 50%. And that's about what we rose today. We rose about $50,000 when we put that Bill on. We'll look for that to become maintenance margin at 25%, which is going to be about $25,000 in BP. And we're back into that. So we're going to hopefully hold Bill. So we're good at 76%, knowing that this is probably going to ease up in the next day or so as Bill moves from initial to maintenance margin in our account. But that's what happened here. So just to keep an eye on adding Bill. But that's what we did today, was added $100,000 in Bill. So we'll just keep that note here. So we did get back into Treasury bills here, trying to lock in some of that price and looking to add some extra income to the account. Right now at that $100,000 at roughly 5% annual should net us around $500. I think it's like 513 or something percent. So 513% would be about 5,130. Divide that by 12 months, 430, $500 somewhere in there is what we'll probably net on our Bill position, as long as we don't get some kind of another big span margin increase, where again, if we need to, we just drop Bill and we're no worse for the wear. All right, we did gain $945 today, so it took our gains for the month up over 15 grand, 4.72%, over $15,000 for the month. Another up day. However, it wasn't all pretty and it wasn't perfect on the session. So let's take a look at what we did. So we had 3 losing trades today. Let's walk through everything. So we started off this morning, and let me maybe expand this a little bit so we can see it a little easier. So we started off this morning. We did a call credit spread. I felt that on the gap up, we were a little extended, that we might peel back a bit. That was not the right call. So we ended up taking a 2x loss. So it's usually 50% win, 2x loss. We took the 2x loss on that one. On the dip, though, we went back in and we sold a put credit spread. So on that put credit spread, we were able to take that off for a 50% winner. Didn't get quite the premium that we had on the call side, but it's okay. So we had a winner 0 DTE on that. We went back in on the move higher, sold another call credit spread. And if we really look at these, the 43.90 level never got hit today. So had we held all the way through on SPY, we'd have been okay. The high of the session today was 43.86. Obviously, that's not, we don't hold till expiration, and there was no guarantee. So we did rise. And then we had this 44.05, 44.30. Again, we would not have been tested, and we never got above 43.90. We were 15 points away from it, but I just took this off for the 2x loss, a little bit over 2x with some slippage today. So I took another pretty good loss on it. Then we went back in with another put credit spread today that ended up being a winner. However, we took $400 in there. So 2 wins, 2 losses. The unfortunate thing is your wins are 50%, your losses are 2x. So we've got a little bit of damage on 0 DTE today. We had such a great run. We'll go take a look at those in just a minute and show you, because we actually have one more 0 DTE trade on for today. We did close the naked puts on a long-term 112 out. Those closed for 60 cents. Actually, it's $1.20 because we have 2 of them, but we closed it for 60 cents. So we had already rolled, put debit spreads. We finally just closed the naked puts on this one, booking us $2,200 in gain. So a nice big gain, totally offset the losses in zero DTE, but it's frustrating because I really was counting on that gain to really bolster the account, and the 2-0 DTEs kind of wiped out that gain. So we really netted nothing there. We did take off a hedge that we had on. So we took the hedge off for a loss. They're on there for protection. We were in that hedge for about 5 days as markets started to get going to the upside. We were expecting potentially some more downside. Didn't happen. Markets moved to the upside. So I did take the hedge off. Didn't really feel like need the hedge right now anyway, so I'm happy. I'll just book that loss on a day where I had some gains. But I wanted to get out of it before it got even worse if we continue to move to the upside. All right, we did do a little scalping on futures today. Very little, very small scalp, 43.98 to 43.96. I had sold the ES futures. So I sold short one contract on this. It dropped about $2.25 there. So we netted 113 bucks. Not a big winner, but we'll take anything that we get. So we did trade that on a little bit of a scalp today. We went back in with another call credit spread this afternoon at 55 cents, took it off at 30, almost a 50% winner there for another 125 bucks. I only went 5 contracts. I'd already put on quite a bit for the day, but I really liked this setup. I wish I'd gone 10 contracts. We would have helped out even more. But technically, we had 3 winners, 2 losers on the day. And then lastly here on oil, we took off our put, we closed the entire put debit spread for a winner. So because oil had dropped into our trap at 79.78, with oil dropping to what, 77, and change today, well in our trap. This thing expires in 8 days. I didn't want to make any adjustments to it. I thought, you know what, I'm just going to take this off. $1,800 on just the trap, and we still have the naked puts working on this particular trade. So a good trade here. We sold the PDS for a 61-cent gain. 3 contracts, 1,830 bucks. So again, all in all, a decent day here. 885 bucks on the day is what we booked. 945. Did I add incorrectly? 885. So 885 was the gain on the session today. 885. Maybe I did not put in one of the trades. So anyway, I know why, because I adjusted that long-term 112 naked put here to adjust it to proper numbers. So that's why. But still 885 on the day, another positive day. If we look at our winning streak so far, we've got to go all the way back here to October 3rd. So looking at the number of sessions that we have here in a row, and 25 straight days of winning. So 25 straight days of not losing, I should say. There's a couple zeros in here, but we haven't lost, I haven't had a down day in 25 straight days. We almost were there today, but we managed to pull out a little bit of a win, and we'll take it. All right, that's it for the day on that daily small account here. Delta, Theta in good shape. Theta is a bit low, still hanging right around an all-time high in this account. So we're right there at all-time highs. BP use is down. We'll be looking to add some trades in the small account. And then if we look at the IRA as well today, hovering right around that all-time high. Again, we're just a couple $100 off of new all-time highs. BP usage dropping fractionally today. We're in good shape all the way around. So good day overall. A little frustrating on the 0 DTE. And if I look at those 0 DTE trades, I think that we got them all on today. So we're down $355 on the month. So, a good day should fix that. But we've won 9, lost 2, 81% win rate. We're expecting to do a little bit better than that. But what really has been the difference here, even with an 80% win rate, is 4 of our winners have only been using 5 contracts. on it. So we used some smaller contracts on some of the winners. Had we used the full size contracts, we would have added 250 plus two, or 125 plus 250, another 370 some, 470 some, almost $800 more. We'd be positive on the month. However, if you look at how we've done in the last 3 months, 4 months, really going back to when we really kicked this off in August. So we've had 3 winning months in a row. This month we're only down $300. We've had 55 winners, 5 losers. So we're running at about a 90% win rate, which is about what I would expect. I just got to make sure that I'm averaging or using the same number of contracts out there. We have been using an average of $15,000 in margin on these. It should start to increase as we start to get, start to use 10 more. We were using 5 and smaller an awful lot back here, and now we're up to 10 contracts, and that's where we're going to stay. So you should see this average, but we've made overall $9,615 overall. Our average P&L per trade has been $160 to the good, using an average of about $15,000 in buying power. So you're averaging every single day about 1% a day. Do I expect to make 20% a month doing this? Well, I actually kind of do. So I'm expecting to make some pretty decent money on this as we move forward, but I like where we are. So 0 DTE, certainly using our kind of a discretionary cash flow on the day, trying to keep a good win rate. We have, I think, a good game plan for it. It's a good spec trade for us, and it really keeps us moving forward. It's helped out quite a bit as we move up and down, and it pays for some hedges and some other things that happen in the account. So number one, it's all about the long-term 112. That's the core trade. That's where we're making the most money. If we're looking at those long-term 112s, I'll do a little recap on how we've done last month on this and how we were looking overall on the 112s. Then we're also doing strangles on futures. Those are doing fantastic. So we're really doing well on our dynamic duo. And then rounding off there, we do a lot of 112s on other futures and some spec trades, including some 0 DTE. That's been rounding it off for us. So it keeps us plowing higher, keeps us cranking the daily realized and the monthly realized, looking to take this 15,000 out well over our target. Our target's around $9,000, 9,600 or so is our target. Now we can still drop and realize, so we can still have some losses. A couple more 0 DTE losses like that could definitely impact us. We want to make sure that that's not detracting from the account. We're just using that as a little bit of a side income there when we have the opportunity to do so. But overall, good stuff going on. We're up $5,000 on the week, 5,100 on the week, moving forward. If you like the video, as always, click the like button, subscribe if you're not a member here. Come check us out in the Discord. Fantastic stuff going on over there. We've got a lot of new members out there asking some great questions, getting some really great engagement. It's the best I think we've ever seen our channel as far as engagement. Igor is also starting a new PM account portfolio. So we're running a trading account of about 330,000 now, up from 30. So we're running a standard trading account running Reg T. Igor is going to be running a PM account using about $500,000 or so. And then I've also got a small account that we started with 10, but it's at 15 right now. So we got a small account, and we're running an IRA. So we have something for everybody. Whether you're a large trader with PM, a medium to small trader with Reg T, or it's your IRA, we got something for everybody out there. Or if you're just into 0 DTE, we got some fantastic guys trading 0 DTE, making a killing out there. So join us, see what we're doing. And then you've got Gabe with some of his butterflies and his active trading strategies going on. Master at butterflies, mastering volume profile, telling you where the levels are going to be each day. A little bit of something for everybody. Come check us out. All right. If you want to do that, look in the description below. Use KING as a discount code gets you $50 off the first month. Serious investors only. We want serious people in there that can bring something to the table, not just want to follow alerts and follow along like lemmings. We want you to challenge. We want you to come up with ideas. We've got back testing going on. We've got guys proposing different type of trades, new styles, new creative things. It's a think tank, folks, and that's what you want to be a part of, because if you are the smartest person in the room, you're absolutely in the wrong room. And if you're not in a room, how are you going to get any better? Okay, you got to put yourself in the room to get better. Come join us. Everybody take care. Stay safe out there. We'll see you in the markets tomorrow. Bye-bye.